You're listening to Bob Pellerin on CanadianMineAnalysis.com podcast.
Thank you for joining us. This is Bob Pellerin, and today I've got the pleasure of being joined by David Morgan of The Morgan Report. So, David, I know that you track the broader market, and although you have a reputation for certain precious metals, that you do cover more than that in your analysis and your comments and so forth. Can you tell us a little bit about what you're seeing on the broader spectrum, mainly about the currency wars?
Well, great question. The currency wars continue. I think the main thing for people to contemplate is what the ultimate result of the end game of a currency war would look like, which means that all fiat empires have eventually died. So even though the United States dollar is the reserve currency of the world, you've seen a lot of mitigation against that, with particularly the BRICS countries that have formed their own banking system, their own settlement system outside the SWIFT system, and the general currency wars that have taken place that me and many others have forecast for so long. And I call the currency game the banker's last vestige of hope, meaning that the great populations believe that a certain currency is superior to another one, that one piece of paper with certain color on it is better than the other one. And of course, this goes back and forth between like the euro and the US dollar, or the yuan and the dollar, or the Aussie dollar because it's resource-based, or the Canadian dollar because it's resource-based. And all these things are pretty much nonsense. The fact is certain that they do fluctuate amongst each other, but they're all going down. So what are they going down against? And that is the ultimate money, which is gold. As J.P. Morgan said a long time ago, and I'm not a huge J.P. Morgan fan, but we can learn from anyone, gold is money and everything else is credit. So all the fiat currencies are based on a debt-based model or a credit-based model. And because of that, and there's no backing, there's no soundness to the money, they could be printed ad infinitum until they're no longer accepted. And that's, of course, been the case throughout history. The idea that it's over is not really correct, in my view, because the Chinese have only been really locked into the Keynesian economic game for really more than a decade, but not a whole lot more, in a substantial way. I mean, in a meaningful way, where they became like the number one producer of goods on a global basis. So looking at that a bit deeper, Bob, what we see is that the yuan will be admitted to the SDR, special drawing rights, through the IMF Bank. And I think it's last day of September of this year. So that implies strongly to me that the currency machinations back and forth between nation states, and my currency is better than yours, and we're going to lower our, we're going to devalue our currency against the dollar so our exports improve, and all this rhetoric that you hear constantly in the currency markets, which are, by the way, the most traded and active markets out there, generally speaking, is not over yet. And I don't think it's going to be over for some time, meaning a few more years, because you're going to see this back and forth in this, as I say again, last vestige of hope to try to get everybody locked in to the currencies of their choice or their ideal before the rug is pulled out for the last time. And that's when the people realize the only thing left standing is the ultimate money or real wealth. I mean, real wealth will stand. I mean, real estate that's non-leveraged, or factories non-leveraged, or commodities non-leveraged, or any of that stuff that's not credit-based. Anything that you own that isn't based on credit, that you own outright, that's real wealth, will remain standing and should remain yours. But anything that's based on the debt may crumble before your eyes, meaning that the real asset may remain, but the ownership could change.
One of the top questions I get is always, is the U.S. currency a safe place to park your savings? And of course, it does become a challenge. I mean, if we were to put ourselves back a few years, and I think you'll agree with me that at some point, if someone were to say, I don't like gold, I don't like silver, I don't like, for whatever reasons, they didn't like the relics from the past, it would have been sane to say, you know what, invest in a barrel of oil, invest in something tangible. And of course, then you look at the markets and how they reacted and how the price of oil went down the tubes. And it took me by surprise. Not that I was not expecting a downward pressure for various reasons, consumption and so forth. However, I never expected it to get down to this level. So obviously there is some fear out there that things like gold could drop below, the proverbial $1,000 psychological mark. And I think you probably know this better than me. There was a lot of banks, there was a lot of reports out there at some point, even recently, that were calling for the demise of gold again to drop below, to $900. I mean, I guess all kinds of different figures. I'm not going to start quoting any of them. But obviously there are people out there that are risk averse and feel that there is no use for gold. I mean, what do you think are the reasons why gold, silver, and some of the other precious metals would not follow the general commodities, copper and whatnot, that would go down when there is a lack of industrial activity, for example?
Yeah, confidence. I mean, if you have a deflating or contracting economic system, and we do globally. I mean, China's in trouble, Europe's in trouble, the US is in trouble, Canada's in trouble, everybody is contracting. So why would the metals go up? And the answer is because it's confidence. The extra pyramid is something that I refer to quite often, and I think it's the easiest and best way for anyone to understand how the faith in the system deteriorates. It's an upside down pyramid. At the top, you have the most illiquid, untrusted asset class, which basically is derivatives. And under that, you have like junk bonds. And then there's a feature, upside down pyramid. You can look it up on the internet. Just Google Exter, EXTER, upside down pyramid, or Exter's pyramid. You'll see it. There's various versions of it. I have the original. The original really needs to be updated because when John did it, there really wasn't the derivatives exposure at that time that there is now. But the concept, the general basic ideas are very, very much alive and well. So as you scramble for what you trust the most or have the most confidence in, the one thing that almost everybody trusts is a physical piece of paper. I mean, if you've got those, you've got 10,000 in the bank, and you go into your, friendly banker and you withdraw it all into Canadian dollars, and you've got hundreds, 50s, 20s, 10s, 5s, and 1s, and they're all in your possession, you feel pretty safe. I mean, even if the bank failed, you've got your money out of the bank. It's physical. It's there. You own it, and that's it. So this is really the place where people feel the most safe, is where they have their cash. And not necessarily out of the bank, which I just described, although that's the ultimate. It could be just, in cash, in the format of not at loan. It's not in a bond. It's not even in a money market. If you want to be extreme, it's readily available. The problem is, and what's shown by the extra pyramid, is that that's the last place before the run to gold. So if you look at the upside down pyramid, the one space just above in this upside down pyramid, gold is the ultimate money, is cash. And I believe that's true. I mean, people, as you pointed out, Bob, I mean, gosh, I thought oil was great, but who thought of getting into the $30 barrel range? I thought, foodstuffs, why not be in wheat or cotton, or why not be in base metal or whatever. And all this thinking about real assets and real wealth is valid. It's just you get to measure it against something that is an idea, a concept, but it's reality to everybody, and that is some type of monetary system based on really electronic digits. I mean, you couldn't have everyone go to the bank and get their money, quote unquote money, their currency, out of the bank it'd be a bank run, and there's not nearly enough trees to print it all. It's all held in the computer memory. I mean, not all of it, but the great majority of it. So what happens is the confidence is lost in the paper money system or the digital money system. When that comes into question, then there's a run to gold, because gold has withstood not one banking era, not two banking eras, not five. It's survived basically since man could freely determine what they thought money really should consist of. And silver is really a subset of that. But this is why gold and silver have gone through, 8 Chinese dynasties that tried, I should say it more correctly, through 8 periods during the Chinese dynasties that tried paper money and failed. They're 100%, 8 for 8. And basically all fiat currencies end in failure. So until that takes on the consciousness of the minority, it isn't the majority. It's the majority that gets left holding the bag. The majority are the people that end up with the pieces of paper that they trusted and thought was the ultimate way to preserve their wealth, and find out it isn't, and determined that the next time it won't happen again, and then the next time it actually does happen again. So that's the way I see it. That's what monetary history teaches us. Whether it's going to go exactly that way or not remains to be determined. I mean, I want to state, on the public record, I'm open-minded. I mean, when you have this gulag from a psychology perspective that has the idea that you should lock people in and not let them have cash, that they basically their money's not really theirs in the banking system. Once it's in the banking system, it's the bank's money, and that law is true in most countries. And you can't withdraw it. They're basically tightening down the screws in this state system. And I say state from a global perspective, not nation states, that they watch everything we do, every transaction we make, and basically we need their permission to do anything. I mean, at the arcane level, at the most extreme level. Obviously, in day-to-day life, it's transparent to us. I mean, we go about our business and don't really think about the fact that every transaction we make outside of a cash transaction has some kind of monitoring behind it. So, will it unravel the way that it always has? And the answer, again, is to be determined. I think it favors that idea, but it doesn't guarantee it.
Well, if I can get into the paranoid theory here, even with cash to some degree, I don't know this for a fact, but I have been told by some individuals that were in the banking industry that so you might have some ATMs out there that will actually scan the bills as they come out, read the serial numbers, and of course, if you then take that cash and you were to, let's say take $500, go to Walmart and spend $200, go to Costco and spend $300 of it, they could eventually track down where you spent your money, and they could start to figure out what you're accumulating and make prediction as to how much cash you potentially have. Now, I don't know whether they've gone to that length in what country or and so forth, but the possibility is there. The technology is there. As a technologist, I can tell you that it doesn't take much to add a scanner to an ATM machine, and it doesn't add much, to any database by any means to track it.
Yeah, I just got back from Canada, as you may know, Bob, and your money is kind of plasticky now. I mean, you have this kind of see-through window, and it doesn't even feel like paper anymore. It feels more like plastic. But you're right, the technology exists. I mean, and paranoid, I think, is the right word. I mean, you don't want to live your life in fear. You want to live your life in bliss and joy. But there are concerns. I mean, you don't want to be naive either. You want the balance in the middle. I mean, you can only do what you can do as an individual or as a company owner or whatever. But it is very, very concerning to me and many others that the technology is a double-edged sword. I mean, some of it, we really like having it, and the other part of it is, geez, they can monitor every doggone thing we do, think, say, or buy, and that's unfortunate. I think it's a little extreme. I do think that, to summarize, we are seeing a global contraction. We're seeing a slowdown across the board. Trade is coming not to a halt, but boy, based on the Baltic Dry Index, it's certainly slowing down substantially. Retail stores are closing one right after the other. Unemployment continues to go up, even though governments massage the numbers and put on a smiley face and pretend everything's okay or going to get better. But the reality is a contraction in the physical economy. Look for the food problem to arise probably within a year or two. Look for the infrastructures to continue to deteriorate and not be repaired properly by the nation states. And look for a general malaise in the population of, fear, discontentment, feeling that the populace of pick your country, doesn't matter, are not being treated justly by their masters, by the overseers, certainly not leaders at this point, rulers. And so that's the general trends. I don't see those changing for a while. In the meantime, those that are alive, awake, and aware are going to do their best to become more self-sufficient and escape the matrix to the best of their ability. And these are people that usually at the beginning are marginalized and radicalized and made fun of and talked about as being, preppers or paranoid. They're, leaders at the beginning are always ostracized. I mean, and then, of course, as things do go the way that I just outlined, more people join into the leadership, and I'm using these words carefully, and start to realize that, maybe that gal or that guy or that group has a pretty good idea. I think, things are moving in that direction, and maybe I should be more self-sufficient. So this is what you'll see, I think, near the end, is you'll see SOCs, self-organizing communities. And you've already seen them. I mean, it's not like they don't exist now, but you'll see more and more of that. I think that's the trend. That's the counter trend. That's the counter revolution. That's the, peaceful way to basically move out of this this control mechanism that looks at everything. And again, you think, do, say, and buy. And I say think in quotation marks, but they're they're even coming up with the thought police that can predict based upon certain characteristics what your next action may be. That exists now as well. It's not pervasive; it's more experimental, but it actually exists at this point in time.
If you wait till the markets really start to rattle, until the gold, silver, and so forth really gets noticed by the media, what I fear is, you were mentioning bank runs before, but would there not also be coin runs, if I can call it that, bullion runs? And at that point, just at the exact moment where you would want, if you were not interested in that market before, you suddenly realize it, you wouldn't be able to get the gold or the silver or whatever it is, or I guess you'd try to get whatever you can at that point, but what are you seeing as far as sales? I mean, are you in touch with any dealers that can tell you a sort of sense of the volume that's going on right now?
Oh, yes. First of all, let me back up and talk about, the bank run. I mean, it's a run to paper, whether you take the paper out of the bank or not, before the run to gold. The run to gold is the ultimate run, as you're describing. So just want to emphasize that, Bob. As far as what are the takeoffs in the physical market, I'm very much, connected to many of the dealers, not all of them, many of the largest dealers in the retail sense and wholesale sense as well. Some of the depositories that are approved by the CME. I'm familiar with the Delaware depository owner. I've known him for years. So I do a survey every couple of months with, the Mike Maloney's, some of the depositories, some foreign and domestic, and get a feel for what their flows are. A-Mark as an example. So I got a pretty good handle on, what the real deal is as far as what the amount of physical metals are flowing in and out in all forms, even on the commercial bar form. So yeah, I definitely have an idea about it. I also know that right now it's really not as robust as might be indicated. A lot of this gold movement is not the physical variety; it's the ETF variety, the paperized derivative system. Not to say there isn't physical metal moving into Russia and China every month. There is. So I want to paint an objective situation. I want to be as objective about it as I can. But I agree, Bob, that there could be and probably will be a point where once enough of the population wakes up that wants physical metal, that it's going to be nearly impossible to get it or get it in size. I mean, you will probably always be able to get, a few Krugerrands or Canadian maple leaves, gold or silver, for enough pieces of paper. But if you're going to come in and try to buy, 20 million ounces of silver or 10 million ounces or 5 million ounces of gold, that could be a situation where you're just not going to have it. And you could get in a situation, I think also this will occur, where no one's offering what they have. I mean, if you have, I don't know, make up a number, 1,000 ounces of silver, it's all in coin form. It's all in one ounce coins, for example. So you got 1,001 ounce silver coins. And you've collected that over several years. And the system starts to unravel rapidly. I mean, someone may offer you, paper, they may offer you canned goods, they may offer you whatever, and no, someone just accept the offer. I mean that more in the context of money. I mean it more in the context of quote unquote money or currency. I think in the currency markets, there could be a time where it goes no offer. In other words, I'll give you, $100 for an ounce of silver. Nope, don't want to sell it. Well, I'll give you 110. Nope. So the bid goes up. So it's always a bid offer process across a free market, or what's left of a free market. Someone bids, someone offers, and they make the transaction. So if something's in demand, the bid keeps going higher and higher and higher until the bid meets the offer, and or the bid meets the offer, and then transaction takes place. So in this example, I'll give you $200 for an ounce. Nope, don't want to sell it. So this could take place. I mean, will it take place? Remains again to be determined. But I want to give that idea out there to people, because most people have no idea why the metals are called precious. They're precious for a reason. If you go back and look at my YouTube channel, Silver Guru, or just Google Silver Market Myth or Silver Market Myths, David Morgan, you'll find one of my myths in the silver market that outlines this in a very succinct way, much probably more succinct than I'm doing with the radio interview here, Bob, that talks about the myth of this abundance of precious metals that will never run out, that no matter, as long as you have enough paper, you'll always be able to buy it. That is not necessarily true. And these systems that break down, I mean, these are rare occurrences. I'm not trying to say like this is like happens, a week from Thursday. I mean, when those type of discontinuities take place, I mean, those are huge. And I want to do a bit of a plug here, Bob, so before I forget. We've rebranded the website to themorganreport.com. So just go to themorganreport.com. I just put together, after quite some time of contemplation, a new report for everybody for free. It's called Riches and Resources. And all we need is your email and a first name. And of course, we are straight up, so we have to double opt in. In other words, you can't give us a phony email and get the report. It's got to be valid. You've got to say, yeah, it's really me, and yeah, I really want the report. Once you do that, you click and verify, you'll get this 11-page report. And the first thing in there is a film that discusses the end of empire. And it's an hour and a half long, and I think it's something that everyone needs as a basis of where we are in the global empire and what has taken place and how badly the people have been had. And then there are solutions at the end of this movie as far as what you could do on an individual and collective basis. And there's much, much more in that report than just that movie, but it starts off with that because, Bob, you know me fairly well at this point. I'm kind of a big picture guy, and I kind of go from the top view, and then I, drill down from the big picture and narrow it more. So I just want to get that out there because it's something that's free. I put a lot of time and effort into it for everyone. It costs me time, the most valuable commodity any of us have, but it's worth it because I really think in my more darker moments, you might say, that I probably haven't done as much as I possibly could to try to wake up as many people as I possibly can. So thank you for letting me get that out there, and I'll certainly take your next question.
Well, just so you know, I mean, I have read your paid report in the past, and I've absolutely enjoyed it. I really appreciate the time and effort that you and your team are putting together into these reports. It's unfortunate that when things are calm right before the storm, that's when you've got to get prepared. And that's why I'm trying to get the message out as well on a couple of our websites. So, but back to some of the questions. I don't want to read all these questions. There's quite a few of them, both from the last conversation you and I had, and some of them were directed at some of the, I guess, the articles that we put on our websites that were specific. One of which is, are the mining companies holding back silver production due to low prices?
Yes and no. One company, New York-based company, did hold back some of their silver in hopes of higher prices. And if memory serves, it was somewhere around the $19 level. And of course, as most of your listeners know, we got into actually hit a 13 handle. It was almost 14. It was 13 and, whatever. I don't know the exact price. And of course, now we're looking at 15 and a half. So yes, a company took leadership in that area, but most of them are doing the opposite. And this is typical of the industry, and I'm not holding them at fault. It's just the way the world works, is when there's low prices, they do what's called high grading. And high grading means they go to the part of the mine, if it's available in a particular mine. Not all of the mines are structured this way, but many are, where they get the richest ore. Because if silver's at 15 and you've got a part of the mine that has 10 ounces of silver per ton, rather than the average grade of 5 ounces of silver per ton, your geologist will take you over there and you'll start mining that, and you'll start high grading. And the reason you do that is to stay in business, because if you're mining, 5 ounces a ton, you're not going to have enough cash flow to keep everybody paid and all the equipment maintained and all the legal stuff that's needed and insurance and everything that goes into that business. So this is true of gold, it's true of silver, it's true of most. Now, there are mines that are like open pit, highly disseminated, that basically the minerals are scattered evenly or more or less evenly across the mining facility, and you can't high grade. But in many instances you can. So this is what takes place. So actually, these low prices tend to see more production, not less, because of high grading.
Last question, which is, I believe a lot of the listeners out there will have heard of peak gold. Is there such a thing as peak silver?
There is. It's an economics problem. A lot of stuff like, what's the average price of silver cost out of the ground? Right now it's probably in the $15 or $16 range, because oil is in the $30 range. If oil was back at the $100 range, then the all-in sustaining cost for an ounce of silver would probably be back to the $20 level, 21, something like that. So these things all ebb and flow. I mean, this is an economics equation, and it's the same thing with the question you asked. What's peak silver? Well, peak silver at $15 silver might be next year, but peak silver at $100 silver might be 5 years from now, because what was uneconomic at $15 silver is now very economic at $100 silver. And that moves the curve. But we go through all of that in great detail in the book, The Silver Manifesto. So if you're really interested in that question about peak silver, we take a whole chapter and explain it so people can really understand it. Based on our, top-down analysis, it kind of takes into account what we think the average price in paper terms will be. We were looking for silver to peak probably in about 5 years. Based upon, mines that could be viable that aren't right now. I mean, I'll be honest, they aren't right now because of $15 silver. But we think that we'll see, higher prices this year, and then 2017, you'll really start to see an acceleration. And then probably through 2018, you will see the end of the third leg of this massive secular bull market that I believe will go into the financial record books. Coming all the way full circle, Bob, back, and I might just summarize, back to the extra pyramid, when that moment in time and that psychology changes, where instead of 1% of the world's population not trusting the paper paradigm, that 2% decides that they don't trust the paper paradigm, and this credit bubble has burst. And once the perception is that the credit bubble has burst and it cannot be repaired, that either the dollars that you get won't buy you anything, or that the bonds are either becoming worthless or they'll never be paid off, take your pick, that people start the run to gold. And once the run to gold starts, it's impossible to turn it off. The old adage, there's no fever like gold fever, really is a maxim that holds true.
Well, thank you. That was very educational.
Thank you, Bob.
We really appreciate you listening in today. If you enjoyed what you listened to, please consider subscribing to the YouTube video or to the Apple iTunes podcast. If you have any questions for David Morgan or myself, just go to the CanadianMineAnalysis.com website and click on the Contact Us button. This podcast is copyrighted 2016 and is produced by Bob Pellerin.